Hello everyone and welcome to another Ballard 360 segment. Today we're going to be covering Strata insurance, which has been a hot topic for us in the real estate industry since January of this year. And we've been experiencing it up to and including a few of our most recent deals where we've seen increases of up to 300% in insurance premiums. Mark, I know you recently took a course on this. Can you tell us a little bit about what's going on and what the latest information is?
Sure. Yeah. Insurance forms a big part of the budget of any strata corporation and that are covered by maintenance fees. And what we've seen of late is a massive increase in premiums and a massive increase in deductibles. And these things are causing some very, they're trickling into everybody's day-to-day lives because of what that impact is on maintenance fees and your own insurance that you're getting. So when you're looking at insurance in a general aspect with stratas, is the strata carries building insurance for fire, damage, earthquake, all flood, all that, okay? And they carry this group plan that covers the whole building, including the walls, and everybody's heard of the times where somebody's drain goes afoul or your washer goes, amiss and blows a pipe or something, and it rains down into the suites below. And that insurance is what the strata is actually mandated to have by the law. The Strata Property Act mandates that. And what happens is that you would carry your own insurance as a strata owner for your contents and for any improvements that the developer didn't originally put in there. And one of the aspects of your own personal insurance is to have deductible insurance that covers the deductible on the building. And much like any insurance programs, when the numbers get huge, the deductibles are quite large. So these are deductibles that are typically in the range of $25,000 to $50,000, okay? And so our strata insurance that one gets when you go and buy a strata not only has to cover your contents and any problems, but it covers this 25 to 50 grand, okay? And so that because the strata will pay the deductible to their insurance, fix the building, and then under most, if not all, strata property rules and bylaws, that deposit deductible goes back and is levied against the offending unit. So this is kind of the structure under which we have property insurance. And insurance companies are profit motivated companies. They're there to make money, as all insurance companies are. And what's happened is over the last few years, and this is relatively recent, that there have been a lot of claims against them. And as a company that has premiums coming in and deductibles that help pay for the claims are getting more and they're getting higher. Okay, so what we have is we have a lot of insurance companies that have paid out a lot of claims in the last couple of years and have reassessed the sort of replacement cost of buildings. And as this has more effect as the buildings get older, because those costs of replacement value, are increasing as construction costs increase. So the big challenge for them is to deliver these on, in a money-making way. And so what happens is the insurance companies have now, instead of just defaulting to sure, we'll grant you insurance, they are now underwriting in a very critical fashion. And what that is doing is on some buildings, that is actually to get the same insurance, the insurance companies are asking for higher premiums and higher deductibles. And the higher deductibles is really a big issue because that filters down into, the homeowner. And those deductibles have gone from 25 to 50 to like $200,000 to $250,000. So it's an egregious increase. And of course, that affects not only your maintenance fees, because now your insurance cost is higher for your strata, but it now affects your own insurance, because now your deductible insurance is now at a much higher value. So your costs have increased on maintenance fees and your own insurance fees. And it's crucially important that you understand that before you buy, because when you're writing a deal, you can always put a subject to insurance and obtaining some, but also understanding what is the cost of it. Okay, and what we're finding now is, and that came out in this course, which I didn't actually realize, is that insurance companies can actually deny coverage. And so that puts the Strata Corporation offside on the law. They're actually not being lawful if they're not adhering to the Strata Property Act. And the Strata Property Act says that they must maintain insurance. That's period. Okay? And some buildings have had almost impossible getting insurance. And so what has happened is, in order to mitigate the risk that any one insurance company's under, the insurance industry has gone to this kind of mutual fund kind of idea of how to mitigate risk. And that is by offering somebody insurance with, say, 8 different insurance companies all taking a piece. And this mitigates the risk, because instead of in one insurance company, say 8 insurance companies all having one building, and one building has a big problem, that insurance company can get buried. Whereas if they just have 10 or 12% of 8 buildings, then their risk and payout is mitigated. Okay, so this idea is really actually been created not too long ago, and has partially filled in this gap that we're seeing in the strata property insurance market. The other part is that some insurance companies are offering partial coverage. Now, this is a real problem, because if you're in a strata and trying to sell that strata, that you have to disclose. And then the new person has to come in buying, knowing that the strata is not covered with a complete insurance package. Mm-hmm. And that's offside of the Strata Property Act as well. But some stratas are just trying to grab at anything they can get in order to have some coverage. So it's very important. What we're seeing on the street is, of course, this double whammy. The higher maintenance fees, we've seen doubles, we've seen triple maintenance fees. The newer buildings aren't getting away from it, although the newer buildings are obviously newer. They have newer code regulations that they followed in construction. They have new materials, all of which help the insurance costs stay down. Buildings are getting hammered. So it's something that a good realtor needs to be aware of, and those out in the buying world need to be, especially when you're looking at condos, need to be very concerned. I will end on the fact that I don't think that we've seen the end of this. I think that the insurance companies are trying to find that new equilibrium. And I don't think, because we're so new at it, I don't think they found it yet. So you're not protected if you had a 3-fold increase in maintenance fees, or 3-fold increase in premiums, because it may be that we've got a couple years later they're going to do it again. Right. So it's nobody has a crystal ball, but it's something that a good realtor needs to be aware of and needs to advise their clients of.
Awesome. Well, thanks so much for the info, Mark. And thank you to everyone who stayed with us and watched. We want you to stay tuned. We've got information coming up on probate, estate sales, and foreclosures. We'll see you soon.
Cheers.